Hi everyone, Gianni Depocci here with you for Theo Trade, and today is Tuesday, the 18th of March, 2025. We're just a couple of days away from spring now, and you can definitely feel it here in Michigan. The birds are chirping and the air is warming, and I'm very much looking forward to the seasonal change. And I think stock markets might be looking forward to a seasonal change here as well. Now, we are finally seeing another round of selling after a couple hard days of some short covering. We saw a flurry of buying come into the market. 90% of stocks, more than 90% of stocks in the S&P 500 were up on Friday and Monday. But we're right back to selling today. And, if you look at this from a technical standpoint, all we really did was come back up to rally and retest this former support turn resistance zone, and we may have completed another lower high. Now, there's a few things going on in markets that I'm watching right now. One, you have the NVIDIA day. NVIDIA, obviously a market moving stock. Doesn't seem like anything exciting has come out of that just yet. The second one being the talks between Trump and Putin on the geopolitical front. Talked about this in Theo Live today, and I pointed out how a lot of the European markets that have done so well, they include Poland and Germany, areas not far from the Ukrainian conflict. And I don't think that we would be seeing those markets do so well if we weren't about to see a positive resolution. And then the third one, of course, is the Fed rate decision tomorrow. I am looking forward to some sort of potential Powell pivot. I don't think he's going to raise rates, but he may offer some encouraging words regarding the prospect of future rate cuts. Right now, it's a toss up for the May meeting, but it does look like this market is wanting more liquidity, more stimulus from the Fed, especially as we're seeing that government side of the stimulus be taken away. All the spending cuts that are happening with Doge is not exactly stimulus coming from the government. So, stocks are down here today. The NASDAQ is leading the sell off. Dow is down, but not as much. The Russell is down calmly as well. But the bigger story, something that we've been talking about and will continue to pound the table on until proven otherwise, is how we have another day here where US stocks are getting sold, but Chinese stocks are getting bought. And this continues to be a theme that is very early in the making. It's something we've been talking about since the start of the year pretty adamantly. And I think that this presents a big problem for the US tech sector in general. The nature of the US market really changed back in January when we had that deep seek moment. And I think now US tech stocks, especially the Magnificent Seven, now being called the Maleficent Seven, have to come up with something new aside from AI. It seems to be the case that a lot of these Chinese AI and tech companies are doing what these American tech companies are more efficiently and for less cost. And so money is flooding into, the Chinese market. You're seeing Chinese internet stocks down today. KWeb, I've been watching this. This one looks pretty strong. But whether it's Baba, this is a name that we have in the live chat room looking very strong. You have other names like JD that have been very strong, and even starting to pay some attention here to Baidu. Okay, you do have Tencent earnings coming up. This one hit a new high, but the terrific 10, based on what I'm seeing here, is looking a lot stronger than the Mag 7. And I think this is a trend that is going to continue. And the one that I really think speaks volumes about what's happening right now when you compare BYD, which is kind of like China's Tesla, to Tesla itself. I saw an article yesterday that BYD has this new supercharge function where you can get like 200 to 300 miles driving in a 5 minute charge. Tesla has some pretty cool technology too, but you compare these two charts, it doesn't seem like the market has a lot of excitement or optimism for Tesla right now, down another 5.5%. And you look at some of the other US big tech giants like Apple looks to be consolidating its losses. That doesn't look so good. Google dropping to new lows here, also showing some issues. Amazon, it looks kind of standing out above the rest, but you can see here that Microsoft seeing another round of selling. Amazon is kind of interesting to me here because you are on this technical support here. I think it looks like one of the better Mag 7 names, but I've been talking about this and how I think that if the US tech sector wants to emerge and maintain its place as the hub of innovation, I think that quantum computing is going to play a big part of it. So right now the AI craze does seem to be somewhat in the past here for the U.S. It seems to have moved over to China. But what is one area of the U.S. tech sector where there is still some strategic advantage, and that's in the quantum computing. You had some names in quantum have some big pops yesterday. Arquit Quantum was up pretty big. Quantum Corporation made a new high today, but these aren't really the types of setups that get me too excited just yet. Even QBTS hit a new high yesterday, showing some strength. But I'd like to see a little bit more time built out in these patterns, a bigger base built before I get more excited on quantum. But I think that could be a big theme for the U.S. tech sector going forward. And we need to see some of these chip stocks recover. So the Philadelphia Semiconductor Index down pretty hard today. We were talking about Nvidia. Did we just complete another lower high? It could very well be. At the very least, we need to be on the lookout for another round of selling here in the US, and whether or not we make a new low remains to be seen. We could have a situation where, chip stocks drop to new lows, but the indices do not, or the indices drop to new lows and the chip stocks do not. But one thing for sure is that we need to start seeing technology and semiconductors outperforming on a relative basis. We are not seeing that happen right now. Instead, you're seeing sectors like energy emerge as the 1 week leader. And then since the start of the year, it's really been healthcare. Healthcare has been doing good, but that's not exactly what bulls want to see. So a bit of caution there is warranted. But aside from China working very well, we continue to see strength come from the precious metal space. Gold breaking out to a new all-time high, and it's not too far away from our upside target in the $3,300 area. Silver also having a day, and our names in Alamos Gold hitting a new all-time high in Agnico Eagle Mines, also seeing a decent rally. And I was talking about this with Blake Young today in Theo Live, and discussed how with copper showing the strength like it is, not exactly a recessionary indicator. And I think right now what the market is pricing in is an economic slowdown, lower economic growth, but not necessarily a recession. And there is some exposure that we have here at Theo with the broader precious metal space. MP Materials hitting a new high yesterday, looking strong. But again, precious metals kind of living in their own planet. And it just so happens, staying true to the international stock theme, that a lot of these individual precious metal mining stocks are based in various parts of the world, whether it's Canada or overseas. So we're really staying true to that international theme, and it's been one of the strongest starts of the year for Chinese stocks and international stocks in quite some time. And the market is not showing any signs of letting up on that trend in the near term. Let's jump over to crude oil, which plays a big part in this inflationary situation. I think right now the bigger risk is unemployment, and depending on what Powell says tomorrow, we could be on the verge of starting a new reinflationary wave. But I'm also not ruling out, the chance of a final epic breakdown here in crude oil. I'm not ruling out a situation here in crude oil where you get a final drop to the $45, $50 area. That could be the low. And if we start an epic climb back to $90 to $100 per barrel from a drop down to 45, 50, well, that's going to be an appreciation of 100% from that level. And that would certainly show up in the CPI data. So CPI, inflation, not an issue right now. There's been some weakness in the labor market. I think it's going to force the Fed to start lowering rates sooner than later. I'm enthusiastic about what's potentially happening in the real estate market in the second half of this year. Bonds are bidding here again, and we're still seeing money leave the U.S. The euro seeing a nice rally. The Japanese yen starting to make a little bit of a comeback after being down earlier in the day. So that's a good environment for precious metals. In the past, it's been a good environment for stocks. We're just realigning right now. I do think that U.S. stocks will end up in positive territory this year, but we're still figuring this out in the near term. And again, a drop to new lows cannot be ruled out entirely. And of course, we can check back in on crypto since it has been a pretty good indicator of risk appetite in this market. And unfortunately, for the high flying traders in this tape, not really seeing what we need to see in crypto just yet. Both Bitcoin and Ethereum seem to be consolidating their losses, which is leaving the door open for a final leg lower. Ethereum could drop to 1,500. Bitcoin could drop to 70, 72,000. If that happens, that could be a setup for low, even though we have already satisfied some of the price requirements that we were looking for in terms of completing a bottom. But there's still some issues there, and until we see a meaningful turn there, I have a tough time thinking that there's going to be a lot of risk appetite in this market, especially if we're coming off of this and another lower high with respect to the trend. But as I like to say, when in doubt, zoom out. And when it comes to the longer term trend in stocks, yeah, you could drop down to this, 5250, $5,300 area, almost retesting those August lows, and it still wouldn't change the long term trend in stocks. This is a normal, regular, healthy cyclical correction, which is part and parcel of markets. Seems like right now the administration in Washington is more concerned about interest rates and cleaning up the balance sheet of the federal government and the deficit situation versus the stock market. So it can be an adjustment period, but that doesn't mean that we won't have very good times in the not so distant future as well. So that's what I'm looking at right now, guys. Thanks for watching. Keep an eye on China. Keep an eye on precious metals. That's where the trades are working, and we're going to stick with those until proven otherwise. Talk to you soon.